This one's just mind-blowing. The UAE, obviously famous for its oil wealth, they now get 25% of their power from nuclear.
The UAE.
That just left me speechless. And on top of that, you don't really read much about it.
You can think of it as an intention to move the market, right? That's what they're doing. It's a super thinly traded market. It doesn't take too much volume to actually really move these prices here. At any time they trade above NAV, they buy the physical.
And Sprott has bought 62 million pounds in the last couple years. So that is on sort of estimated global physical demand over 1 year at 180 million. So that's a huge amount.
G'day, money miners. It's nuclear time. Was that a bit? That sounded like one of those Channel 9 intros.
Oh, you got to keep mixing it up, mate.
For the state of origin. JD Trav, what are we? 6th of July. What is it? Thursday.
Mate, I am radiating.
Oh, sensational.
When did you think of that one, mate?
Just then.
JD's been researching that hard. He's about to actually have a meltdown.
They just keep coming.
Oh,
They
boys.
just keep coming.
Boys, yesterday's episode was a bit of a...
It was a bomb.
It went off. Bloody best ranked 1 out of 10 for 24-hour views, our chat with Wayne.
Was it?
Sensational, yeah.
Yeah. Now, there you go.
It's absolutely smashed it. Good stuff.
Uranium.
Bit of word on the... Should I do the word on the decline we missed
what do
from
you got?
yesterday? Well, after that chat, having a bit of a talk around with folks, probably I think a key element we missed in this gold M&A play is evolution.
Yeah.
Possibly evolution.
Coming in for Musgrave?
Well, no, coming in for that area.
So that they
possibly coming in for like a Westgold or something, going big. Apparently, they've got a lot of liquidity now with cash and their debt facilities, nearly $1 billion worth of liquidity.
They had a big investor day about a month ago, and Jake Klein said they're on the hunt for potentially a couple more assets. They're looking. So
the thing with evolution though is people that invest in them love them because they've got this relatively low all-in sustaining cost. We know that's a bit of
the copper
artificial.
It's artificially low because of the copper credits. But acquiring Westgold doesn't help that proposition because it's a high-cost producer.
So, we're looking at Westgold being the big player in that area to take, whether it's and Ramelius with Gascoigne and Musgrave and Alto and Great Boulder and all that, but is there going to be a bigger player that's just going to consolidate the whole region?
Much bigger fish.
Evolution will be key. You can nearly write Northern Star off with the amount of capex they're putting into KCGM. It looks like they're pretty tied up, but will Evolution make a play?
I don't know.
Word on the decline.
I don't think Westgold is a takeover target.
Maybe
I was
not.
getting a little bit conspiratorial when they had this change of substantial come in. It looked like a bit of a swap, but I've toned my nerve on that one. But we'll see.
Wait and see. Right, boys, let's get into uranium, U-23, whatever it bloody is on the periodic table. JD has gone bloody balls deep into the world of nuclear reaction.
Mate, I think I've just scratched the surface, actually. There's so much to this one, but we just want to see what the miners think, whether they like a bit of nuclear, uranium, ASX players and the like. So, yeah,
I think this will
feedback.
open us up to a lot more uranium conversations with people that get in touch following this. So I guess this is the intro into nuclear and uranium and what's going on.
Yeah, so
JD.
Let's get into it and why we started researching it.
How'd you come about this actually, JD? What sort of sparked your interest to do this episode?
So Sweden came out with an announcement a bit less than 2 weeks ago now, I think, and they essentially changed their climate goals. So they changed their 2045 goal from 100% renewable to carbon neutral. So prior to this decision, 40-odd years ago in 1980, just after the 3 Mile Island accident, they voted to stop all expansion and phase out nuclear. Now, this was going to be a multi-decade process because these power plants have lives, they can have lives over 50 years.
What was the 3 Mile Island accident?
It was a bit of a meltdown at a nuclear power plant in America around that time, just I think 1980 is when it happened, and nobody actually passed away there, but it just caused another bit of commotion similar to Chernobyl that was a few years after that, although people did pass away.
Fukushima, yeah.
Yeah, so they're the 3 big significant events that a lot of, nuclear critics point to.
Yeah.
Yeah, and it's a absolute crock of shit that we've had no development in the nuclear space as a result of the I guess, political opposition campaigning that's gone against it. We all know it's like super clean energy from a
one of the
safest
sources of energy we can get, reliable baseload energy. So we'll get more into that. So what Sweden's now done is they've come out and they want to be carbon neutral by 2045. So that's the same year, just a bit of a different stance. And obviously the key component is that they're now including nuclear in that energy mix, whereas that wasn't previously the case. They're going to wind down their nuclear power plants. So it's been a bit of a while in the making. In 2016, Sweden's parliament agreed that new nuclear reactors could be built only at existing sites. But in reality, this is just cost prohibitive. They couldn't get there because these things are quite expensive. So now they've come out and changed it, and they're going to provide loan guarantees. So in
they have a pretty high proportion of their current electricity coming from these, non-fossil fuel sources already, don't they, JD?
They have 30% coming from nuclear, and they have an astonishing 98% of their electricity. So not all their energy requirements, but 98% of their electricity comes from non-fossil fuel. So obviously up in Sweden and in Scandinavia, they have a lot of hydropower, similar to the Norwegians as well. And they have substantially grown their wind capacity. Pretty amazing. So the state-owned utility, Vattenfall, is now planning to build 2 small modular reactors, which we'll touch on again later. And they're also looking to extend the life of the remaining nuclear reactors that the country has.
So sorry, JD, before you go on, when you were talking about electricity and power, so when you say total power generation for a country, that includes like your fuel for cars and things like that. So electricity is only one component of the total power.
That's right, yeah.
Yeah, okay, got you now.
So they're expecting quite a bit of a pickup in the next, in the coming decades in the electricity demand, because some of the biggest businesses in Sweden, I sort of had to, check this as I was reading through, but they're mining and mining related. So, Matty, you'd have seen heaps of these, but Atlas Copco, Epiroc, Sandvik, they've got steel producers, SSAB.
Atlas Copco was split into Atlas Copco and Epiroc. So Epiroc's the mining division. It used to be all under Atlas Copco, but huge. Sandvik, they're both, Sandvik and Epiroc are two of the, or if not the 2 biggest suppliers of mining equipment.
Yeah, that's right.
Underground, mostly for the underground industry anyway.
Yeah, and some of these sort of manufacturing and mining related companies, like their state-owned iron ore company LKAB, they need pretty substantial amounts of energy. So they said...
I'm pretty sure that's an underground iron ore mine, that one.
Yeah, and it's not a complete private company either. There's state ownership there. But they said alone that their processes would need 1/3 of the entire of Sweden's 2019 power. So pretty substantial stuff. So I reckon next we should just zoom out and see what's going on in the nuclear front, because with nuclear, it's super case by case, country by country. Stances are different all around the world. So just running through some of the high level facts, 10% of electricity globally is generated from nuclear.
I wouldn't have thought that. Like first pass, I would not have predicted that.
Because 0% is Australia.
Yeah, because we live in a 0% nuclear environment. You would not think that, I wouldn't have thought that 10%. That's fascinating.
Yeah, so there was
China, right? It's like,
yeah.
I mean, and China's only a growing component. So that generation is at the same level it was roughly 20 years ago. But through the 70s, 80s and 90s, it picked up as amount of total output. So if you go to Europe, in Germany, they've been sort of quite famous, or infamously, depending on who you ask, phasing out nuclear.
This was bizarre. I remember this sort of last year when you had such tightness in the energy markets by virtue of the Russia-Ukraine conflict, and Germany sitting there phasing out their nuclear plants and importing shitloads of coal.
By the Green Party, no less. It's just astounding. So you also have France. They're one of the biggest pro-nuclear countries in the world. 70% of their electricity and 40% of their power generation overall comes from nuclear. That's greater than any other country in the world. You've got Japan. Obviously, they had that horrible Fukushima disaster in 2011, but they've changed their stance since then. So nuclear power came to a bit of a standstill post-Fukushima, and now they're sort of doing a bit of a U-turn on that. They are restarting idle power plants, and they're making plans to build next generation capacity. China, like you touched on, Trav, they're in the process of building 24 reactors. There was an article that came out and policy sort of decisions made by the Chinese a couple of years ago that they wanted to build 150 new reactors within 15 years at a cost of $440 billion.
Wow.
And that might sound like a shitload of money, but...
It is a shitload of money.
It is, but if you break it down per reactor, that is far cheaper than the West has been building them for a long, long time. Canada, this is just astounding. So Justin Trudeau, his party is famously anti-nuclear, he said not too long ago in a one-on-one conversation with one of the leaders of Germany that we are very, very, very serious about a return to nuclear and investing in some SMRs.
So he was pro-nuclear or anti?
They were anti-nuclear. Supposedly green, but anti-nuclear, and now they're just doing a complete 180.
Yeah, right.
He went on to say, we're going to need a lot more energy and we're going to have to do much more nuclear over the coming decades. So that is just a complete about-face from their policy for a long, long time. You've got the Inflation Reduction Act in America, which we're going to delve into a lot more in the future. And they're including production tax credits to help preserve the existing fleet of nuclear plants. They also started up a new plant for the first time in 7 years.
There was an amazing stat you told me about the UAE, JD.
This one's just mind-blowing. So the UAE, obviously famous for its oil wealth, one of the cheapest oil fossil fuel producers in the world, they now get 25% of their power from nuclear. Yeah. So in about 10 years, they constructed 4 new reactors and brought them online. That is just...
UAE.
It's like, that just left me speechless. And on top of that, you don't really read much about it.
No.
Like, that's an astounding fact.
Not until now.
Yeah.
I'd be interested to hear where they purchase oil, especially when they're such a big producer and exporter of oil. Like they've gone from using that to now importing uranium to supply their power.
Yeah, so the uranium itself will come from places like Australia, and the plants were built in joint venture with South Korean groups.
Gotcha. Leveraging their expertise.
Yeah.
Mate, you kept talking about these small modular reactors, the SMRs. Like that's the rage now, right? Like,
yeah, let's touch on them because these traditional nuclear reactors, you know, they've got big upfront costs. You know, the marginal cost to produce energy is small, but they're huge upfront costs, and a lot of the IP, the technical know-how has been lost in the West because we haven't built new ones in so long. So a lot of, you know, startups and ventures with, you know, government, private startups have been developing small modular reactors. So just quickly what they are, they're obviously smaller than traditional nuclear reactors. They're modular, meaning factories can build and assemble components, and obviously they're reactors, so they harness nuclear fission to generate heat to produce energy. That's similar to a traditional nuclear power plant as well.
So when did these come about, these SMRs?
They're still really in development phases though. Right. So there's only 2 countries in the world.
Been talked about for ages.
Yeah. So there's only 2 countries in the moment, China and Russia, that actually have functional SMRs. Yep. But there are dozens and dozens of countries that are looking to produce these. Like even Bill Gates famously spoke a couple of years ago about investing bucket loads of money into this, and this is a future. Like there's advantages. They're smaller. They can be built quicker and be assembled, you know, in different locations.
They can be all hooked up together, I assume.
Yeah, modular. Yeah, but the huge barrier to funding any nuclear plant is financing it, right? Because you're looking at billions in CapEx. It's so hard to finance billions in CapEx.
Yeah.
So the moment you can lower that into the hundreds of millions, it's so much more palatable.
Yeah, so that's just a standout key differentiator from traditional nuclear power plants. And then you also potentially have less frequent refueling of these SMRs. So
what's that mean? Potentially less frequent refueling. How does that work?
So these things have enriched uranium go into them, you know, on the period of every few years or so, and these smaller ones would perhaps not need as frequent refueling because they're not as big scale operations.
Also means less waste, right? Because you're putting it in and it's got to come out in some way as well. But if you're putting less in, you're also getting less out from a waste angle.
Yeah, righto.
So why don't we get into Australia? And like you touched on before, Maddie, we don't have nuclear here. Our situation's pretty different to Sweden.
Well, I suppose the only thing we know about uranium in Australia is Olympic Dam.
Absolutely. Not just Olympic Dam as well. You had Ranger in the Northern Territory for a long time.
Honeymoon's coming back online.
I mean, we've had uranium mines. Obviously, some of them aren't pure play uranium mines, and we've got the biggest reserves of uranium in the world. We've got some of the biggest deposits up in the Northern Territory, and the reason that these power plants haven't been a feature in the Australian energy mix for forever. I mean, that just goes back a long time. There was huge anti-nuclear rallies across Australian cities in the 70s, like there was around the world. And then we sort of just came to the conclusion, because we had cheap coal and other sources of energy, that we didn't need them, and we've never got round to actually building them. Whether we actually turn to having nuclear be a component of our energy mix sort of remains a point of debate. And
we've got other energy sources are actually not so cheap anymore. Yeah, I mean, look, oil prices are elevated high and staying high. Coal prices doing the same. I mean, we just got a re-rating in energy prices across the globe. Yeah. I think that incentivizes the alternative.
Renewables aren't as cheap as a lot of people sort of perhaps think they are. You have to build all these things as well. They have certain lifetimes to them.
And then we've got to also supply power to a growing global population as well. So by the time of this stuff's becoming more expensive, there's more bloody people on the earth to supply power too.
Yeah, exactly, Matty. So that sort of leads to the market dynamics, and there's a whole bunch of different facets that we can talk about when it comes to the market dynamics of uranium. So why don't we just start with the price? So we're at about $57 per pound right now in the spot market. Now that's not always the price that these term contracts are signed at. So the term contracts are the contracts between the uranium miners and the utilities that need the uranium for the power plants.
So it's similar to a nickel setup. Like the miner has to have an offtake with a power plant or something like that.
In a sense, you've seen it with lithium as well, in the terms of just what an offtake is. You're getting access to a set amount and you're selling it for a fixed price, so that the company producing the stuff, that's just how it is. It's not like gold that's
not like
sold,
gold. Yeah.
Sold at a spot price. So traditionally, these deals have been signed at a sort of $10 per pound premium to what the spot price is.
The demand from China is where a lot of the conversation goes. JD, what did you look at there?
So China, like is the case with pretty much all commodities, is just a behemoth. They consume so much, and the growth we spoke about when touching on different countries before is just magnified in China because of the ginormous population that they have. So they've come out in recent sort of times and said they want to produce 1/3 of their uranium domestically, another third through foreign, owned mines in joint ventures and so on. And then they actually want to purchase 1/3 on the open market. Now there's another aspect of spot price that's fascinating. It's these physical uranium trusts getting in there and buying.
The financial market players.
Matty Langsford was talking about that the other day, the Sprott Physcial Uranium Trust.
Yeah, 100%. So you've got those guys, you've got Yellowcake, ANU Energy, URC.
Some of them are raising money that haven't come on. The way they work is if they have a trade above.
What are these?
Even Boss as well. They bought physical piles.
Yeah, that's to enter term contracts in the future.
Yeah. But the fact is that they're entering the market. I mean, these guys like, Sprott, they're buying and holding and sort of anticipating higher prices.
Yeah. So is it similar to what China was doing with those Shanghai copper stockpiles?
Oh, you can think of it as an intention to move the market, right? That's what they're doing. It's a super thinly traded market, like real thin. So it doesn't take too much volume to actually really move these prices here. And so Sprott and a couple of others are set up around the thesis, and you get a bit of speculation. And anytime they trade above NAV, they buy the physical and hold it.
And Sprott has bought £62 million in the last couple of years.
So what are they? They're storing it somewhere, are they?
Yeah, they're storing it. So that £62 million is on sort of estimated global physical demand over 1 year at 180 million. So that's a huge amount. It's just crazy. And yeah, like you sort of said there, Matty, they just hold it.
And their investment thesis is that long-term uranium is going to go up and they want to hold it.
It's a trust, right? So you have some, if you invest in it, you've got some entitlement to the physical. It's a mechanism for investors to cause a squeeze. That's how I think about it. But at the end of the day, like, it's supply that probably comes back into the market in one way, shape or form down the track.
Yeah. If it's a trust, doesn't a trust have to distribute earnings every year?
It's not a trust in the sense that I think you're thinking with an Australian like funds management group. It's slightly different. Like these are a Canadian mob.
Yeah.
So it's slightly different. There's another aspect of, future potential supply that's also interesting, that's inventories. So over the past sort of 12 years since Fukushima, we've seen inventory levels supposedly just wind lower and lower and lower. Like, inventories are pretty hard to get a view on there. It's a bit of an opaque space to see, which of these major companies and governments and so on, how much they're actually holding. But given we're sort of seeing an uptick in demand, you're sort of seeing analysts start to forecast that we're near the end of that drawdown and that these utilities are going to have to go to the market again. And that is another sort of added aspect to the bull thesis. Now, you've also got the supply chain dynamics. And one part of this stands out to me, which I find really fascinating. It's the enrichment process. And we won't get into the science there at all because it's quite complex. But the main takeaway is that about a third of this is done in Russia. Now, that it just obviously screams out as a sort of not secure supply chain, and that's something these Western countries and utilities are going to have to, change. They're going to have to invest in enrichment capacity in more aligned countries or in their own countries.
There's an act going through the Senate in the US right now. It's like the Reduce Uranium Imports from Russia Act, something like that.
Yeah. So obviously these guys, Rosatom, they haven't been sanctioned because of their strategic importance to Western countries. Another sort of fascinating aspect of future potential supply is what they call secondary supply. So this sort of refers to the uranium that is obtained through various alternative means rather than just, being the primary product from a mine. So a couple examples are, depleted uranium that's been generated as a byproduct after that enrichment process that I just touched on. You've got stockpiles that are held by governments and utilities, and then there's reprocessed uranium, and there's a few other sort of aspects that add to that secondary sort of supply.
There's one interesting takeaway I had when I was listening back to your conversation with Matty Langsford when he dabbled into the uranium space. You brought up NextGen JD and posed the question to him, what impact will that, I think, like 30 million pounds of new uranium have on the market when it enters in, I think you said FY27. And he said, well, do you think it's going to be FY27? There was some kind of indication that in reality, when you have to build these things from a discovery through to a mine, that the real timelines are going to be longer as well. And I think that adds to that kind of market dynamic you're talking about.
Agreed, definitely.
Yeah.
There's another interesting dynamic with the sort of listed equity value and the uranium price. Just a bit of a chart that I think you saw.
Yeah, I think I'm kind of interested in this from the angle of like, what do these market dynamics mean for the stocks? That's what we talk about, right? The stocks. And there's one chart you can sort of get some indication of relative valuation on a historical basis. You can chart up the URA ETF, which consists of uranium stocks, and divide it just by the commodity futures curve for viewers to whether equities are relatively overvalued or undervalued historically, versus the underlying. And you can see it's kind of like it's near all-time lows in some ways. It's super depressed there. So like at absolute face value, and it's a thumbs up metric, it looks like the equities are pretty beaten up relative to what's happening in the spot commodity right now. And I think a lot of that is because these equities are a high beta and the market's very risk off right now.
Yeah. I think a lot of those sort of bulls that go into the uranium stocks are hoping for a sort of price spike that we saw in sort of 2007. Just, these guys, the high cost producers have a lot of talk to that price.
Yeah, and speaking of the bulls and the bears, Shaw's, they put out their quarterly research monitor today, and that includes a uranium sector piece. Their bulls, they model a price spike going all the way up to US $85 per pound, and then in real terms, it having a long-term price of US $67 per pound. So and they point to the upside risk to demand, the return of utilities to the term contract market, and the potential for more government support as the basis for their bullish take on it. But on the other side of that equation, JD, I listened to an interview with Warren Irwin last night. Warren Irwin,
friend of the show,
friend of the pod. He was I think he was the first fundie that we had. My second fundie we had come on the podcast for an interview, and he couldn't help himself but talk about uranium. And I'm going to play that bit for you and Matty now.
The current group of uranium speculators are some of the most rabid speculators I've ever seen in my entire almost 40 years in the business. They are lunatics. And why they're lunatics is because they're all expecting the big run up to 140 and they're inflation adjusting 140, back when it happened in 2007-8 timeframe. And now they're saying, well, if you inflation adjusted, it's going to be $200 a pound and I'm going to make so much money in these crappy little uranium companies, all rich, and I'll have generational wealth. And so they're getting all pretty jacked up, right? But if you take a look back, okay, realistically, okay, at the last uranium run, Paladin, it went from like a nickel dime to $8, but it then went right back down again. There was zero value created, zero. You look at the 400 to 600 uranium juniors that were created last time, like almost all of them went to zero, right? So the promoters and the shills got out there and just raped the market and took millions and millions off the table from new unsuspecting investors. So who's the new group today that wants to speculate in the sector like that? Well, they're the people that didn't get smoked back in 2007, 2008.
Zero.
Hot take.
What do you think, JD?
I love it.
Yeah.
He's got a few strongly held opinions, and he's been around the markets
So
quite a bit longer than we have.
Contrarian to the uranium thesis.
Yeah, well, he's bullish nuclear. He likes uranium, but he just doesn't want people to get carried away. I fucking love him because he's so bold and has such an I don't give a fuck stance. And I just love that. It's great content. I don't know if he's got the bloody returns to back it up, but I love the content, Warren. Keep it up.
Right, before we get into the ASX plays, JD, question to probably, if you do know, or future question we'd like to know, it'd be good to know how much uranium is like needed to supply it around the world. Like how much in demand will it be, like in comparison to say coal, lithium, like when you balance the abundance of it, the mineability, then to start really amping it up across the world. I'd like some colour on that. It's probably not something that we can discuss today. I'm sure someone's got a view on it, but
I'm sure
it'd be good to know how much would Olympic Dam's uranium supply.
There are every single commodity is filled with these charts that show a supply gap, and some of them are real and some of them are crock of shit because they just show some compound annual growth rate that's got some stupid assumptions baked into it. So I'm just a bit apprehensive to ever talk about that piece.
But what about, I want to know how much for the uranium that comes out of Olympic Dam, what does that power? Because I haven't got a gauge on how much uranium does what. Yeah. Like, is it more efficient? Is it more efficient than coal?
It's hyper efficient. These tiny little pellets create so much fucking power, so much power. It's such an efficient, the energy density of uranium is unparalleled, and it's like orders of magnitude more efficient than coal in that regards. I mean, it's the capital intensity that's prohibitive, and the political opposition to it.
There you go.
Yeah, great answer. ASX players, should we get into them?
Oh, the stocks. The money miner's going to want to know about the stocks, man.
Who do you bet on?
Oh, that's it, right? And we're focused on the ASX players because we're based in Australia and we're familiar with the ASX. So I'm relatively keen to talk about some of the names that are on the ASX that people try to get exposure to uranium via, and there's quite a few of them. I mean, the biggest pure play uranium name on there is Paladin. PDN is the ticker. They're restarting the Langer Heinrich uranium mine in Namibia. It used to be like a pretty distressed situation, but they've cleaned the balance sheet up now. The project, it is 25% Chinese owned, but it's currently 45% constructed now, and indications are that it's going to be on time and on budget. The offtakes are largely with the Chinese partner there, but the company's capped at 2.2 billion. And so it captures the attention of the fundies via its size and perceived like greatest risk reward sort of ratio for that reason.
Yeah, Paladin was the one that Warren just mentioned there. They had a real tear 15 odd years ago, and
look at the share price, right? It just
wild.
I mean, obviously uranium markets went like crazy and then stop being crazy. And then if you have a debt, you become distressed and that kills your equity. They had a bunch of restructurings and had to sell non-core projects, etc. But the balance sheet's clean now. The project's set to come online in calendar year 2024.
Yep. We've also got Boss Energy.
A bit closer to home, this one. So they're restarting the Honeymoon mine there. That's in South Australia, and it's on track for first production in late 2023, so this year. It's been one of the better performing stocks on the ASX this year. It's up 53% and it's now capped at over $1 billion itself. They're yet to announce any sales into the term market, but they've purchased the 1.25 million pounds of physical uranium, which it'll be able to deliver into the contracts during ramp up itself. I think given the good run that they've had, they look pretty fully valued, absent a strong commodity run of the underlying. There's still ramp up risk there, right? But the current market cap is a few multiples of the initial mine life NPV, which always makes me a little bit nervous.
Yeah, and they're not a super low cost producer of uranium, so they need a slightly higher price to be.
Yeah, the way to think about all of these restart mines is they restart for a reason. That's because they were put into care and maintenance at one point because the market fell. So you can't expect the restart. The restart ones are great because they're the first ones back into production because the capex hurdle is lower, but they are inevitably the marginal cost producers.
Yeah, and I think a lot of the ones we'll talk about, the higher market cap ones are restart. Mm-hmm. So we've also got Peninsula.
Another restart one. These ones, they're going to be the first mine restart back into production, expected mid-year this year, so any time now. They're restarting the Lance project in Wyoming, USA. They're a major beneficiary of the government support. We talked about the Reduce Russian Uranium Imports Act, which is currently going through the Senate, and that's some pro-domestic mine development initiative out of the US there, which they benefit from. You look at their production profile. Stage 1 is going to be 0.8 million pounds of uranium per annum, and stage 2 can take it up to 2 million pounds per annum. It's capped at about $250 million US dollars. They've entered long-term sales contracts out to 2033 with major utilities there.
And there was another one as well, one of the bigger, capped at a couple $100 million, I think, Lotus.
Yep, Lotus there.
African asset.
They're restarting the Kayelekera mine in Malawi. Someone's going to correct me on this one, but they've got an 85% interest in that one. FID is expected in the second half of this year. The project was put on care and maintenance by Paladin, actually, in 2014. But yeah, Lotus, they're capped at about 250 million at the moment. The project looks like it can produce 2.5 million pounds of uranium per annum from 2026, so it's a bit further out in time. The DFS, signpost capex at about US 100 million with a 10-year mine life, but you got to wait for FID before you can get too excited. So
definitely. Now like Warren sort of touched on, hundreds of these companies were made, back in the boom times, and there's still like a number around, and the interest has sort of picked up again in the last couple of years. So there's a few other sort of high cost developer stories that you looked at as well, aren't there?
Yeah, I think when the physical runs, it's the most, the highest beta stocks that run the most, but those ones don't last the cycle, and they just they get wiped out, right? Like Orange said, they go to zero. But it's this one might not fit that category, but it's the ones that pop up that have just a resource and it's lower grade than anything else out there, but they run so hard because the market just gets excited in the smaller names and they all pump. But Bannerman is, I think of it as the most leveraged name in the sector. They've got this undeveloped project in Namibia called Itango. It's been around for a long time, mate. It's low grade deposit, so high cost operation there. Requires probably prices of between 70 and 85 bucks per pound to incentivize investment to build that capacity. And if it ever does get built, there's a 15-year mine life project there. There's heaps of others too. Like there's Deep Yellow.
They're one of the players that actually hold physical as well.
Yeah. There's just there's a lot of these players around, and a lot of the undeveloped ones in Namibia and Africa that they fit that category of low grade. They would be high cost, and they need the higher long term price in order to incentivize it to actually come on. At the same time, though, I think it's actually worth talking about a couple of the non-ASX names. We're pretty familiar with NextGen, which technically has an ASX listing these days. It doesn't have too much liquidity versus its one in Canada, but that's just an amazingly high grade deposit. Potentially one of the best undeveloped projects globally.
Yeah, in that Athabasca Basin up in Canada. You've also got Cameco. They're the behemoth, the American utility. Mm-hmm. The Kazakhs have a lot of low-cost production. I think they've actually got a bit of a listing, a small bit of float on the London exchange. I have to fact-check that one. But yeah, they're the main players. You've obviously, like you said, got the Chinese have their presence sort of felt in a lot of African deposits too.
Yeah.
And then you got obviously BHP is the big one in Australia.
Exactly.
Biggest producer. I just looked up some quick figures. So Paladin's flagship one's going to produce about 2250 tonne of uranium a year, which is 5 million pounds.
5 million pounds, yeah.
Olympic Dam produces about double of that. So they produce between 3,500 to 4,500 tonne of uranium.
Is the uranium
Over
even the
10 million.
major?
No, copper is.
Yeah.
Copper, gold,
But
uranium,
they
silver.
they have to go through the whole smelting process on site because of the uranium. They have to smelt the copper.
And that honeymoon project is in a similar area from Boss Energy in South Australia as well.
Yeah, so I guess it shows, even though BHP is not a uranium play, it shows how much uranium that one mine pumps out is pretty much double to what these other ones are.
Yeah, and we said that global demand was sort of estimated at 180 million pounds, and like you're saying, sort of 10.
So it looks like about somewhere between 10 a year comes out of BHP.
Yeah, wow.
Out of Olympic Dam. I think it said, 3,500 to 4,500 tonne.
Perfect, guys. So I reckon this energy transition, these energy security issues, they're front and centre. They're not going away. We're going to keep following it. And I reckon hopefully if the money miners like it, there's sort of space for a lot more debate around this, hopefully sort of value-added educational debate. And in saying that, I've probably got a heap of things wrong here. So money miners, feel free to sort of chime in, let us know.
Welcome to my world, JD. Social media bloody criticisms.
Love it.
You got to put yourself out there. I reckon Langers from Terra is going to be extremely handy to expand on the TSX plays of uranium and what's happening what's in North America, I think.
Yeah, there's actual experts out there that, the phone line is open at Money of Mine. Get in touch.
Rick Rule loves uranium. He's another uranium
Looking
bull.
for his email address. We'll get there.
Anyone that knows Rick, put us in touch. We'd love to have the big fella on. He's the man.
Oh, the soundbite king.
Yeah, so we tried to, fact check everything and just give you guys the information, but get in touch. We're happy to expand on this conversation.
Beautiful. Any, what else? Any messages to the money miners? Join the Hooteroo chat if you haven't yet. And if you want to join the Hooteroo chat, join the Money Miners Facebook group first. That gives you access to the Hooteroo chat.
Yep, in the show notes as well, we've got the email newsletter. Get on board.
Sign up. JD's got a sensational, sexy-looking newsletter that's going to come out
once
every Saturday.
Yeah, something like that.
Just like when you're having your morning coffee or where, your kids are playing sport and it's boring as shit and you want to go sit in the shitter and read the Money of Mine newsletter, we will have it on your doorstep via your phone.
And we're going to Diggers. So if you're having an event in Diggers,
we are going to a lot of places.
Yeah, if you're having an event at Diggers, invite us because we're fun.
We're booked out Monday night. I've got the Canaccord bomb. We've got site visits potentially coming up too. We're going on the road.
Yeah, we're doing mobile shows, all around.
Now, if you want the bloody go-to mining media on your mine site, I promise I won't touch a jumbo when I come.
Love it. Hooteroo, guys.
Righto, Money Miners. Great work, JD. Good on the research there, mate. That was bloody sensational. I love your bloody macro-ish bloody episodes where you go wide and far and wide.
Appreciate it, big fella.
Righto. Hooteroo, Money Miners.
Hooteroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.